Hey there, and welcome to another video. My name is Michael Blanc, and I have with me Bronson Hill. How's it going, Bronson?
Hey everybody. Hi Michael.
So Bronson is our director of investor relations with Nighthawk Equity, which is our real estate investing firm. And because, I talk to so many investors every single day, and they have questions. And specifically one I've gotten lately is what happens after the closing process, right? So you're basically going through the investment process, you wire the funds, the deal closes, and now what? That's what he says. So, Bronson, I brought you on the show because you know what the passive investor is asking. So ask away, and I'll do my best to try to answer those questions.
All right, sounds great, Michael. Really excited to be here today. Excited to be here with all of you. So a question that comes up often, and I get on a lot of calls with investors, is just, what kind of updates do I get after closing? Like, what does this look like, and what kind of reports or reporting and the frequency, and what sort of content do I get in those reports?
Yeah, so after a deal closes, sometimes people are like, oh my gosh, did I just make a mistake? What's going to happen? We typically have a webinar, a 10, 15-minute, Zoom call with our investors going, hey, we just closed. We'll take a look at the closing document, give an update what happened. Yeah, the property manager took over the property, and here's what we're doing, right? So kind of like, okay, here's what we're going. And we do this about monthly for about the first quarter or so, just to give you updates. And on regular updates, what we do is we'll have, especially in the beginning, we'll have regular emails going out once a month. And so there will be a narrative that basically tells you in bullet form, hey, here's what's happened, okay? So, for example, what kind of renovations were done, what the occupancy was in the collections versus when we took it over, if it improved, why it improved, if it's lower, why was it lower, and what are we doing about it? What about the expenses? Okay, if the expenses were high and that's part of our business plan, we might say, hey, our expenses are now lower. Here's what we did. Is the business plan on track or not? If not, why not? And what are we doing about it? If distribution is made with that monthly report, we'd say, hey, here's the distribution. So far, we're on track or we're not on track. Why are we not on track? What are we doing about it? Anything else that's noteworthy about the property and the market in general. So we found that this narrative satisfies most passive investors. And for those who want more, we can provide more documents, such as we have the profit and loss for that month. And that includes an actual versus projection, the balance sheet, and rent roll. Now, once the property is stabilized, meaning that it's basically, there's not much going on, we've already made the improvements, the cash-on-cash return is where we want it to be, at that point, we may reduce our updates to once a quarter, because at that point, investors stop looking. As long as they get their distribution checks, they don't really care what's going on. But it's very important for us and our investors to provide regular updates.
Yeah, sometimes we'll get those questions where people they are numbers people, and they want lots of information. They want the numbers. They want to know why numbers are the way they are. So that's something that is important that people get. So that kind of brings us to our next question, Michael, is, what kind of transparency and accessibility should you expect from a syndicator? If you're trying to get a hold of them, or how much should they disclose to you, and what does that look like?
Well, everything, right? Again, most passive investors don't care as much, though you could argue that they should. But if you have questions about anything, if you want to see a more detailed report, or you want to see our lease audit, or you want anything like that, I mean, we're an open book. So we'll share anything that you reasonably want, we'll share it with you. But it's really important, if you're investing with an operator, that they're fully transparent and accessible at all times, right? You should be able to call someone up. For example, Bronson, you always put your phone number in your email. If someone has a question, they can always call you, and you will hunt down the information. So full transparency is important for a good operator, as well as accessibility.
Yeah, for sure. Thanks for answering that. I think that's very true, just being fully forthright in every way we can with investors. Talk for a minute about how distributions are paid and what determines that amount. And, just maybe you can touch base on that.
Okay. This is a great question. Sometimes the investor doesn't really know how are distributions, when do they happen, and how are they determined. So that's definitely the fun part, right, is the cash flow distributions. So sometimes when a deal closes, the first distribution is delayed by a quarter or two. And this is especially important in value-add deals where the cash flow is maybe minimal. And a good operator, here's the thing, and I know everybody wants their distributions, but a good operator makes sure they never run out of cash. Okay, you got to remember that. So there's always enough cash for any kind of unforeseens or emergencies. So for example, we may hold back distribution for the first 6 months, And the reason we do that is to see if there's any unforeseens, right? So you get in there and you do due diligence and you try to discover what's going on, and you negotiate the contract, and you get repair credits, but you get in there and maybe something you didn't discover or whatever. And so there's this unforeseen. You want to make sure you have money in there. So we may hold back some distributions until we are sure we really know the property, and then we can start distributing that money. So here's how the amount of distribution is determined. This is really important. Again, a good operator never runs out of cash. So for example, we're trying to determine what our distribution is. So we have the bank balance. We have a certain amount in the bank. So can we distribute everything that's in the bank, Bronson? Probably not, right? Probably not, right? So we deduct from that our escrowed funds. We have, for example, escrowed funds are things that we might pay once a year or twice a year, like real estate taxes or insurance. So we got to make sure when we get that bill in 6 months, we have money to pay for it. So we can't distribute that right now because then we don't have the funds. So we escrow that every single month, and we deduct that from our bank's balance. We also deduct from our bank balance any kind of funds that we have for capital improvements. So maybe we took in $500,000, so we have $500,000 in the bank, but it doesn't mean I can distribute it because I'm going to use it to improve the property. So what's left in my capital improvement plan, I got to know that. I also hold back any kind of reserves. So typical rule of thumb is $250 per unit per year out of cash flow that I'm putting into a reserve account, again, for emergencies and for capital improvements. Let's say before we sell the property in 5 years, I want to make sure we sell it with a new roof and a new parking lot. Well, when that rolls around, I got to make sure I have that money in the bank, which means I can't distribute that. Then you deduct from that also any kind of asset management fees that are paid out to the general partners, and then what's left over is the actual funds available for distribution. In this way, the investors get their distributions, and we also make sure that we never run out of cash, and we can operate the building properly.
It's great. It's important to operate well and make sure you have cash around. So that's a good call. So talk to us for a minute about tax reporting and what the K-1 form is and how that works.
So we talked about regular updates, which are monthly or quarterly, depending on, and then we have distributions. And then once a year, we obviously have to file our taxes. So what we do at Nighthawk is, and a good operation should give you an annual report. And this is typically, 6 to 8 weeks after the books close on the year. And so the annual report provides a narrative. How did we do versus our projections? If we exceeded them, why did we exceed them? We want to know what's working. If not, why not? And what are we doing about it? And then number 3, what is the outlook now, the pro forma, the projections for the coming year? So in other words, we're resetting the next year's projections. And then finally, it should have a complete P&L and a balance sheet for everyone. And the important tax document is this thing called the K-1. It's actually a really short form. It says, here's what you started with, here's the losses or the gains, here's the distributions that were made, and here's your taxable gain, your taxable loss. And that's what you give to your CPA to file your taxes. And what you'll notice on the K-1s, which is really cool, let's say we gave you $10,000 in distributions off your $100,000 investment, and it's really cool. Because of the tax laws, you may show a very substantial taxable loss on your K-1. And that is the magic of the tax laws that we have here. And then you can use that and carry those losses forward to the next year and the year after that. So this is why the syndication, these real estate syndication investments are so powerful, because the taxes you're paying on them are either zero or extremely low.
Awesome, Michael. Well, thanks so much for taking some time to educate our community. And for our audience, I just wanted to say, you've taken the first step by getting more education about this. And that's the first thing you can do, is really educate yourself. Another thing you can do is, if you're saying, I'm really not sure if this is for me, I don't know if I'm quite ready to invest, but I want to learn more. If you go to the michaelblanc.com/report, you'll see there's a report that Michael's put together, just basically comparing different types of investing, the stock market, traditional investments versus multifamily syndication. It's a very compelling case, so check that out. If you are interested in investing and you're like, I'm there, I want to invest, I want to find deals, go to nighthawkequity.com/join, and basically you'll be able to schedule a call. We'll get to know you, start a relationship, and include you in upcoming deals. So thanks again for joining us, and we'll see you on the next deal.
All right, I hope you enjoyed that. Now, as the next step, download this ebook right here, okay? When you've downloaded that, make sure you also subscribe to my YouTube channel, because then you can get all of the videos that I release as soon as I release. So make sure you subscribe to the YouTube channel right now. Click on that right now. And then also make sure that this is the next best video to watch is this one right here. So hope you enjoyed that. I'll catch you next time.